Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn about all about candlestick formation, how many types of candlestick and which one is you should use for the buy and sell and what kind of candlestick are very high probability and which one you should not use in marking the structure, marking your entry criteria, marking your patterns or everything. Okay, so in this chapter, we are going to discuss all about candlestick formation. And this is our first chapter of Trading Hub 4.0. Okay, let me explain all about bullish candlestick, which one you should use and which one you should avoid. Okay, so in this, right now we have a multiple candlestick is here. You can see here all candlestick showing bullish momentum and everything looks bullish here. Okay, but which one you should use and which one is a high probability and which one you should not use while marking structure, marking other thing and marking like entry and other stuff. Okay. So in this case, you can see here, we have a multiple candlestick here. In a first candlestick here, the body of the candlestick is a very larger. It means momentum are very strong, right? And the next candle is also showing like market was little bit sell here, but market again go higher and create a strong body here. Okay, and a small shadow. It means momentum are extremely bullish and both candlesticks are showing extremely bullish continuation. And you can see here these type of candlestick on bottom and top means for the reversal. Okay, but we are looking for the continuation because our methodology all about continuation patterns and continuation things. So which is very high probability to identify them, and also when you trade, then very highly chances then your trade gone in our direction as per your plan, because number of winning strike is a very higher because mainly focus with your trend, like you can say trend is your friend. So simply we focus on trend direction, that if market momentum is a bullish, then what criteria you should follow, which candle you should follow for the buy. If market momentum is a bearish, then how we can deal them. You will learn all about these things step by step. Okay, so we are just learning about candlestick formation. So these are bullish candlestick here. Okay, first candlestick is here, A and B. These are two strong candlestick here, and C, D, E, and F. Rest 4 candles are also a bullish candlestick here. But look at this one. This candlestick is showing indecisional. Like even this is even this candle is a showing bullish candle, right? Candle color is not decide that market is a bullish and bearish. This is a reversal and like continuation. This is a indecisional. Why? Because buying and selling both side pressure are almost same. Okay, so we can't use this as a continuation. We can use as a reversal. And the next candle also same here. The buyers and sellers both are equal. The long shadow is here in the bottom and top side, and body of the candlestick are very smaller compared to the shadow. So this is also not a continuation candle. And the third one is you can see the market was trying to go higher, but the sellers again push downside and close here. Okay, so in this case also the shadow of the candle is a very larger and body of the candle is a very smaller. It means buying potential are lower compared to the seller. So, and most of the candlestick are showing indecisional candlestick. And the last one is here. You can see this is a called like a hammer type of candlestick. Okay, and this is a mostly used while we are trading in a candlestick formation and patterns and other thing. So when price create these type of candlestick on bottom of the move, so we are looking here for expecting a reversal to the upside. But most of the time this candlestick trap you. Why? Because everyone looking here for the buy, then market trap them and then market go higher. You don't need to try to trade any reversal pattern or any reversal thing. Our main focus to trade with a continuation patterns and continuation thing, because if you follow the like trend direction, okay, if you follow the continuation thing, and very highly chances number of winning probability is a higher compared to the reversal. You don't need to trade any reversal pattern. You don't need to catch any top and bottom. You need to focus only continuation. Okay, so this is a bullish example. If market create these type of candlestick, then you have to aware that which one you should use and which one is you should not use. You have to focus only one type of candlestick. Strong bullish candlestick is here. Strong body, small shadow, which is high probability for you for the buy. Okay, let me explain on bearish chart, because bearish is opposite of the bullish chart. Okay, so this is our bullish candlestick, and now let me explain on bearish candlestick, how it looks and how we can identify them and which one you should use and which one you should. So these are bearish candlestick here. You can see here just reverse of the bullish candlestick here. Okay. So the first candle is here showing strong bearish momentum to the downside. Okay, so this is a continuation candlestick here, and the next candle is also showing bearish indication here, because in a both candlestick the body of the candle is a very larger. Okay, and the shadow of the candlestick very smaller right here. You can see here, but this shadow little bit larger compared to the bottom of the shadow. Why? Because if in a bearish market shadow of the top side is a larger, so this is a good thing in a bearish side. Okay, but if shadow is a smaller in a bottom side in a bearish market, so this is a good indication. But if market create both side equal shadow, so this one is a neutral candlestick. You can see here this candle is showing neutral candlestick, and same candlestick you can see here these are two candlestick looks same here, but this is a not high probability. This is a reversal continuation. This is a reversal candlestick. Why? Because market trying to sell a downside like this, but buyers are trying to go higher. That's why price close here. Okay, so it means buyers and sellers looks like equals. So this is a not a strong candle. But in this candle, you can see price just pushing downside and market close. It means market sellers are very highly active, and these are continuation candlestick. You need to focus on continuation candlestick, not a reversal. Okay, so these two candlesticks are continuation candlestick, and these four candlesticks are reversal candlestick. You can see here this one is also neutral candlestick, and this one you can see on top of the structure like market move higher and then create this one and expecting push downside. But what happened? Market again go higher most of the time and market trap this situation. So you need to focus on candlestick of the continuation. You don't need to focus on reversal candlestick. Let me show you on chart, then you can understand that which one you should follow and which one you should avoid. Okay, so I hope everything is clear till now, and these are very basic, but you need to understand that which one you should focus. You don't need to focus on multiple candlestick. You need to focus on few major candlestick which is actually working for you. Okay, so this is our chart here. You can see this is a 5-minute chart, Euro USD. You can use any time frame. This is not applicable to 5 minutes. You can apply everywhere, like 5 minute, 15 minute, 1 hour, daily, weekly, monthly, any time frame you can apply. You need to follow the same thing. Okay, so in this case, you can see here where is our strong continuation candle and where is our reversal candlestick. If you can see bottom of the structure is here. Okay, so before this move, like before this bullish move, market was bearish here. Market continuation pushing downside. So if market momentum is a downside, so you need to focus on sell side candlestick, not buy side. You can see the multiple candlestick showing bullish here. So this is a trap. Okay, so you don't need to buy here, you need to sell here. So you have to focus on bearish candlestick, which one is create here. So these are strong candlestick which is showing indication that market looking for the continuation. I will show you everything in upcoming chapter, that how you can identify them and how you can trade them. I'm just showing you that how we can identify high probability candlestick like bullish and bearish, and which one you should use and which one you should not. Okay, so the next one is here, the again market pushing higher high because market momentum was bearish and now turned into bullish. So if market momentum is a bullish, then you have to use the bullish strong candlestick. You can see this candle is a showing strong momentum. This candle also showing strong momentum. It means market looking for the upside, because this one is impulsive move and this is a corrective move, because this is a 5-minute time frame. When you switch in a 1-minute time frame or 2-minute time frame, then you will see very clearly flag pattern is here, which one I will cover in a next upcoming chapter. So again, what happened here, this bullish candle is showing strong momentum to the upside. Again, these candle are neutral candlestick. This is a not a bullish candlestick. You don't need to buy here. These are neutral candlestick, and you can say some reversal candlestick is here. Again, market pushing higher high. This is a bullish, and again take a pullback. Again, market create a strong candlestick and market again go higher. So these are indication that market create, after take a pullback, market create a strong candlestick, which means market buyers are active in a bullish market. And same thing applicable here. You can see the continuation here. Market take a pullback, take a continuation, again go higher. Take a pullback, again market create a bullish momentum here. Okay. So we are expecting that if market momentum is a bullish and take a pullback and create any bullish candlestick, then we can buy, right? Okay. This one's again what happened? Market failed. Market push downside, take a pullback, deeper pullback. Again, market trying to go higher and create a strong bullish candlestick here. Again, take a pullback, strong bullish candlestick formation here, and market again go higher. It means if market momentum is a bullish and market creating any bullish candlestick continuation pattern, so simply we can buy here. You don't need to use these one. These candlestick only applicable while we are marking entry point. Okay, you don't need to marking in a like simply. Okay, I'm just showing you that how we can identifying the strong candlestick and the neutral candlestick. Okay, neutral candlestick means long shadow, small body, which is one is called neutral candlestick, or also known as a like reversal candlestick. You don't need to focus on a reversal. We are focused on continuation candle, which one is a, you can say like a strong bullish candlestick and a strong bearish candlestick, and also some type of candlestick like more reversal, which one is a not create any like kind of shadow, which is only created by a strong body. Okay, so simply you need to focus on strong candlestick. Let me show you here. This one is also known as a more reversal candlestick here. More reversal means there is no shadow here, only body, like a strong body here, which one is a known is. Okay, so simply you need to focus on strong body candlestick. Maybe this can be bullish and this can be bearish. Okay, so this one is also bullish candlestick, like a strong bullish candle. This one is also strong bullish candlestick. You don't need to focus on like reversal. This bearish candle is showing a bearish indication, but this is a weaker candlestick. That's why market take a small pullback to the higher, right? And this one is also like, you can see these are neutral candlestick. These are also neutral candlestick. These are all neutral candlestick. Okay, and this one is our reversal candlestick. And this time what happened, market tap here and take a pullback to the higher. Okay, sometimes this one sometimes doesn't work. Okay, but you need to focus on which one is a work high probability. Okay, so most of the time you will see that market momentum is a bullish, then you need to identify strong bullish candle. If market momentum is a bearish, then you need to identify a bearish strong candle for the continuation. We are focused on strong continuation move to the downside and upside. In this realistic price action, you will understand that how we can trade continuation, because mainly focus on to trade a continuation, not any reversal. You will not learn any kind of like head and shoulder, double top, double bottom, channel, flag, price pattern. You will not learn these things. We focus on only continuation pattern, impulse and correction and continuation pattern. Okay, so I will explain these things all in a details in upcoming chapters. So in this video, I hope you learn that how we can identify which candle you should use and which one is not use. So I know you are aware of this type of candlestick. So I hope you learn a few new things. And so I will suggest you take some rest and do some back testing and identify on your chart. Then you can improve your like things. One chapter is clear, then you need to focus on next chapter. You need to start from one by one and you need to apply on your chart. Then you can learn more faster. Okay. So I hope you enjoy the entire episode, and in this video enough for the day, and I will see you on a next chapter. Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn about what is impulse and correction and how we can identify them. Impulse and correction are very important and very easy to understand that how we can identify them. This is a very simple process. When big players are buying in any specific trend, like market momentum is a bullish and bearish, doesn't matter. Okay, so if market momentum is a bullish and everyone is a buying, like big players is a buying, which create an impulsive move. When retailers are buying and selling in a specific point, that's called a corrective phase. Okay, so let me explain you on time, then you can understand what I'm trying to explain here. For example, if market momentum is a bullish, and then what happened here? Market create a small pullback, and then what are you looking here? We are looking here for continuation to the upside, because market momentum is a bearish, bullish. Okay, so if market momentum is a bullish, and after that what are you looking here? This is our impulsive move is here, right? So if market create impulsive move, then what are you looking here? We are looking here after any specific point, market takes some rest and people are trying to sell here. Okay, and then some people are trying to buy here and some people are selling, buying and selling, and then market create a specific zone here, and that's called you can say is a corrective wave. Okay, and some people call it a flag. Okay, and some people call it is a ranging consolidation. There are different name. Okay, so this is our corrective phase here. Okay, and this is our impulsive move, and this is a corrective phase here. Okay, And then what are you looking here? We are looking here for the buy because market momentum is a bullish and we are looking a continuation to the upside. And then this zone is a broken and this zone is a broken. Then we are looking for the continuation to the upside and this move is our continuation. It means market momentum is a bullish and we are looking for the buy after creating a particular zone like this is a flag pattern, and sometimes market create a larger flag, okay, and sometimes market create very small. So this is a depend on how we can deal them. So I will explain in putting all together video. In this chapter, you are need to understand that what is impulse and correction and how we can identify them. Again, market create a corrective phase and then create a continuation. Again, what are you looking here? We are looking here again a correction, something like this, and again continuation to the upside. So this move continue happen in a bullish market and same thing applicable in a bearish market, and market push downside like this and fail to create any continuation pattern and market push downside and create impulsive wave, right? And then you need to wait for to create a correction like this and then break. And if this is our continuation and this is our correction phase, impulse, right? And this is our correction and this is our impulsive phase, right? So you need to understand what is impulse and correction. Impulse means when big players are buying, that's called impulsive. This is a very simple way to understand, okay? And when a small player like you, me, and other retailers, those buying and selling any specific one, they create a correction, okay? So simply you need to understand what is impulse and correction. Let me explain on chart, then you can understand what I'm trying to explain here. Look at this one, what happening here? This is our bearish structure here, and then market again continue going higher high. So if you wanna start from top of the structure and bottom of the structure, you can start anywhere. Simply you need to identify impulsive and corrective phase. So impulsive move is here. Look at this one, price continue going higher high. So this is our impulsive phase, like market continue going higher high, and then what happened? Any specific point market takes some rest and creating buying and selling and buying and selling and create flag and some consolidation range here. Okay, so this is our consolidation range here. Okay, so we are looking here that market can continue go higher and maybe market take a pullback and market can create another move or downside for the reversal, but you need to identify impulsive and corrective phase. So this is our impulsive because market is still trying to go higher and everything looks bullish here. And this is our corrective phase here because buying and selling in a specific point. Again, what are you looking here? We are looking here for the buy and expecting again continuation. So this is our continuation, or you can say impulsive phase. Okay. Again, what happened here? Market create a correction, right? So this correction is our retailers buying selling zone here. Okay. Everyone looking here for buy and sell in a specific point, and then market create a range. And again, we are expecting that market can continue to go higher. So this is our again impulsive move to the higher, right? So if market continue going higher high, create impulsive phase. So we are expecting that market continue going higher high and market momentum is a bullish. And at this any specific point, market take a reversal. So if market take a reversal, you don't need to take a reversal. You need to simply identify impulse and correction. Market push downside in an impulsive wave, right? Not a corrective wave. Very strong momentum to the downside and big players are selling here. So if big players are selling here, then again, what are you looking here? We are looking here for the sell and you need to identify a corrective phase. So this is our corrective phase because we are buying selling in this zone. So this zone is our corrective phase. Again, we are expecting a continuation, a downside. Same thing happening here. This become our larger structure here. This is our larger structure form here. Impulse and correction. And then we are looking at again impulse, right? Same thing applicable here in a bullish market. Again, market take a reversal to the upside. You don't need to do anything. You have to wait for it. Like impulse and market create a correction here. Again, we are expecting that market take a again impulse, but market not create a new impulsive strong momentum. But market take a again pullback and create a very large range here, right? So this is our correction phase here, and this is our impulsive phase here, right? Impulse and correction, and again we are looking here for the continuation. So this move is our continuation, and we are expecting that market continue going higher high, again correction, again impulse, again go high high. So I hope you understand what I am trying to explain here and what is difference between impulse and correction. Impulse and correction are very simple. You need to identify simply if market momentum strongly going higher high in a straightforward way, then that's called impulsive. And if market pushing downside in a single direction move, okay, without any pullback, okay, so that's called our impulsive move, okay. And the correction And corrective phase is our buying and selling in any specific point and create a larger structure. That's called a corrective phase. Okay. So this is very simple. You need to understand if market momentum is bullish and create any corrective phase, that's called a correction, and strong buying and strong selling momentum, that's called impulsive phase. Impulse, again correction, larger, and again impulse. So this is a very simple. I hope you understand what is impulse and correction. And for more details, you can also read ebook when you can understand that what is the difference between impulse and correction and how we can identify them. You will get so many different examples. And also you need to backtest and practice on your chart. You can backtest a previous data, and also you can identify on your chart, which will help you to understand impulse and correction. Once everything is clear, part 1 and part 2, then you need to proceed on the next chapter. I hope you understand and you will learn a lot of new things. So in this chapter, enough for the day, and I will see you on the next chapter. Happy trading. Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn about how to identify patterns and which time frame we should use to marking the patterns. So, in a price action, there are a lot of type of patterns like head and shoulder, double top, double bottom, rise, falling base, tunnel, descending, ascending. There are so many patterns, but you don't need to focus any kind of pattern. You need to focus on few patterns, which is continuation pattern, and that's called a flag pattern. Okay. So our methodology completely means we are working with a trend direction. If market momentum is a bullish and bearish, then we are working. If market looking for the reversal, you don't need to trade, because most of the time most of the patterns are fail due to reversal. Because reversal, nobody can expect where is market going on. Nobody don't know where is top and bottom. That's why people are trying to buy and sell top and bottom and they fail. So you don't need to use any kind of reversal pattern. We are working with trend continuation pattern only, which is one is a very important, is a flag pattern. Flag pattern are very popular and very profitable pattern. So let's see how we can identify them and which time frame we should use to identify the pattern. First of all, you need to understand how looks like a flag pattern, and before to marking any pattern, you need to understand what is impulse and correction, which is already covered in a previous chapter. First of all, identify the impulse and correction, and before impulse and correction, you need to understand where is market going on. Like market is a bullish and bearish. So how we can identify them? Simply, if market creating higher high, it means this is bullish structure, and if market creating lower low, it means market momentum is a bearish. Simple, right? Once you identify them, then you can simply identify our impulse and correction, because if market momentum is a bullish and creating pullback, again going higher high, again pullback and again going higher high. So this is a bullish structure here, and if market is a bullish and this is our previous higher high, and this is a previous higher high, and this is a higher low, right? And this is a structure like in terms of the higher high and higher low. But when you see, this is our impulsive wave, right? When market trying to go higher in an impulsive wave and people are buying, and also a lot of big players are buying introduced here, so that's called impulsive wave. And again, what happened here? Market take some rest and people are still buying and selling in a specific zone, and then again market do continuation. So this is impulse and correction, and you need to identify our continuation pattern at this point, right? So this is our continuation pattern here, looks like a flag pattern, right? Let me show you exactly how we can identify and which time frame we use to marking our flag pattern. In this case, you can see here, this is our Bitcoin chart in a 1 hour time frame. Market momentum was bearish and now turned into bullish. Why? Because market is a bullish here. So how we can identify them? First of all, you need to identify any specific time frame. You can use any time frame like 1 hour, 15 minute, 4 hour, daily, weekly, monthly, any time frame you can use. There is no specific. You can use even 5-minute time frame, but I will suggest you in your starting, start from 1 hour and 30 minutes starting. Okay. Once everything is working for you and you want a multiple entries and you want a lot of entries in a lower time frame, then you can switch in a 5-minute time frame. Okay. But in starting, I will suggest you start from 1 hour and 30 minutes. Once everything is a fit as per your plan and as per your trading style, then you can continue. Otherwise, it's depend on your availability. If you are available entire day, then you can use 15-minute time. Everything is working for you and everything is a fit as per your plan, then you can switch in a 5-minute time frame if you need. If you don't need, then you don't need to switch on a 5-minute time frame. You can continue with 15-minute and 30 or 1 hour time frame. Okay. So this is a clear that is time frame you should follow. It's depend on you. If you are day trader, then you can use 15-minute time frame. And if you want to trade for like 24 hours, then you can use a 1 hour time frame. Okay, if you want to trade hold for few days, then you can use 4-hour time frame. Okay, and if you want to like instant buying and selling, then you can use 5-minute time frame. But in a starting, you don't need to 5-minute time frame, because in a 5-minute time frame, price create a very fluctuation in a lower time frame. That's why everyone not able. Okay, so you need to focus on a little bit higher time frame. If everything is working for you, then you can shift in a lower time frame if need. Otherwise, you don't need to shift in a lower time frame. Okay, let me show you exactly that how we can identify our chart pattern and how it looks like, and which criteria you should follow to mark our patterns and marking our structure. Okay, let's see. Look at this one. Market momentum is a bearish. Okay, and now turn into bullish. So this move happen here. Continue. You need to identify our structure. If structure is a bullish, it means we need to identify impulse and correction. So correction is a zone when we can mark our flag pattern. So look at this one. This is our previous structure here. Market was completely bearish in a downside, and we are expecting that market continue looking for the downside. Look like this one, right? So before this move, look at this one. What happening here? This is our last correction here, right? So this is our corrective phase, which is market broken and pushed downside. So after this, what happening here? We are expecting that again market create any like continuation pattern, then we can sell, right? So this is our continuation pattern, like flag pattern, and this can be a different shape and size. But you need to understand this only happen after impulsive wave. Once market broke this one and create impulsive move, and again we are looking here for the sell to create our correction phase, or like you can say a flag pattern. Okay, so after this impulsive move, we are looking for the sell and to marking the our corrective phase, this one, right? So this is impulse and correction, and this is our flag pattern here. What happened here in this case? You can see impulse, and this is a correction. And if market broke this one and create any bearish indication, then we can sell, which will be covered in next upcoming chapter, that how we can enter. But in this chapter, you need to identify how we can mark our patterns. Okay, you need to only mark our bearish and bullish pattern. Otherwise, you don't need to mark any reversal pattern like double top, double bottom, falling wedge, channel, and descending, ascending, nothing. Okay, you need to focus only on flag pattern, right? So this pattern is a failed and continue going higher high to create an impulsive move to the upside. If market create impulsive move, it means we are waiting here for the sell, right? Now we are waiting here for the buy, because market create impulsive move and we need to wait for a correction. And if market create a violent correction, then we can sell. Then we can buy to the upside, because market trend direction has been changed. Like this is our bullish pattern here. Bullish pattern breakout and continue going higher high, because before this pattern, this was impulsive wave and correction. And again, we are looking here for the buy to the upside, right? What happened here? Again, market created another flag pattern here. Look at this one, right? And why we are marking this one? Because in this case, you can see market not broke the previous high, right? And continue pushing upside and create internal pattern here. Again, we are expecting that market can continue go higher. So what happened here? Again, breakout and again continue go higher. And again, after this impulsive wave, market create another flag pattern here. And this one looks like a corrective wave. And this move only happened after impulsive wave. So this is an impulse and correction, impulse and correction. And again, what are you looking here? We are again expecting that price continue go higher. So price continue going higher high as we expected. Okay, again, what happened here? And sometime, so again, what are you looking here? We are looking here for the buy. If market create correction and give any continuation pattern here, then we can buy here, right? But market not create here any kind of reversal, but market not create here any kind of continuation, and market push downside. And why market push downside? You need to understand. You can understand if market continue going higher high after this impulsive wave, right? Market create any, like it looks like this one. I'm going to show you exactly what I'm trying to explain here. If market momentum is a bullish, right, and take a correction, again continue go higher, again take a pullback, and this is a corrective phase. And after this broken structure and market take a corrective wave to go higher. So in this case, very highly chances market take a reversal. Okay, you don't need to sell here. This is just indication that market are looking for the sell. Okay, so in this case, if market create any like a continuation pattern here, so you need to check very carefully here that this is a valid entry or not. Okay, so you need to understand, if market go higher in a corrective wave, then very high chances that market create any opportunity, then those are 50% of probability that market continue go higher and market can continue go lower in a downside, because this move showing a bearish and bullish indication, it means these are neutral condition. Okay, market is still trying to go higher, but sellers are active here. If market straightforward move to the upside, so this is a strong move, it means buyers are very highly activate here. Okay, so I hope you understand what I'm trying to explain here, which is I already mentioned in the ebook that how we can identify them, right? So let's see what happening here. This was impulsive move, and again market push downside, and there is no structure form here, right? Market heavily or downside here, means impulsive go higher and impulsive or push downside. So you need to identify where is our continuation pattern and when we can take entry here. Okay, again, what are you looking here? We are looking here for this sell. Why? Because this is our corrective phase here, impulse and correction and take entry, and this was a valid loss here, right? Again market push higher and market create larger structure here, looks like this one, and this is our larger flag. Okay, why this is a larger flag? Because you can see this is our strong impulsive move, strong corrective phase, and we are expecting a continuation on the downside. So same thing happen here, and this is our larger flag. Why I'm marking this thing? Because market can create any kind of structure in terms of the flag pattern. Okay, flag pattern size can be a different. So that's why I'm marking the multiple types of shape and size patterns here, right? So this is impulse and correction, and again push downside, breakout and push downside, right? Again, what are you looking here? This is impulse and price create a corrective phase here, and again correction, push downside. So these are heavily selling momentum. It means there is no reversal indication still. So you need to wait for it to create another structure here. Like if market create here, so we can sell here. Otherwise, if market create here strong impulsive move to the upside and create any flag pattern here, right, and for the reversal, so we can continue go higher. So this is a possible scenario in a Bitcoin based on 1 hour time frame. But you need to understand that how we can identify our chart pattern in a different time frame. So this is a 1 hour time frame. You can apply in a 4 hour time frame, same thing. You can apply 15-minute time frame. You can apply in a 5-minute time frame. It's depend on you. Every time frame, like daily, weekly, monthly time frame, any time frame you can apply. Okay. So this is a 1 hour time frame. Let me show you exactly in a 15-minute time frame. Then I will show you in a different time frame. Okay. So this is our 15-minute time frame. You can see here in this leg, so many multiple opportunity here for the buy and sell. Why? Because when you search in a lower time frame, then you will see another structure. Okay. So in a lower time frame, market create multiple opportunity, but in a higher time frame, market take a lot of time to create the structure. But in a higher time frame is high probability. In a lower time frame, you will see most of the time market manipulate your patterns, your structure. That's why. Okay. So you need to start from higher time frame. That's why I'm saying this starting that you need to start from higher time frame, because higher time frame gives you more confident and more high probability setup, right? So in this case, you can see here, this is our 15-minute time frame, and market continue pushing downside, and everything looks like similar as we have done in a 1 hour time frame. And this was our bullish structure here, right? This is our bullish structure. Market continue pushing higher high, right? Break the structure, continuation pattern, break this one, again continue go higher. So same thing applicable in a bullish and bearish market right here. And this thing happen in a lower time frame, like you can see in a 5-minute time frame everywhere, right? So this is our impulsive wave right here, and this is our corrective phase here. Again, market continue going higher high. This is our corrective phase, right? So simply you can identify our impulse and correction in a very easily, right? You need to simply identify impulse and correction and impulse. This was happen here. But this is a larger structure in a 1 hour time frame, but in a 15-minute time frame, market already gave entry here and take a complete structure, and stop loss and target, everything is clear here, and very high chances we can get here to R very easily. So this is a reason to use like multiple time frame, like you can use 15-minute and 1 hour time frame. It's depend on you, right? So this is a very simple entry setup here, and same thing here. Again, market create another setup here, right? So this is a possible setup here for the buy and sell in a different time frame. This is our 15-minute time frame, and same thing applicable in a 5-minute time frame, you want 4 hour time frame everywhere, right? So this is our 5-minute time frame, you can see here, this is our market momentum is a bearish here. Before this bearish move, market was bullish here. Look at this one, how price is reacting to the upside. Correction, impulse, correction, again correction, impulse, again push higher and pushing downside. And this is a corrective wave. There is no strong impulsive move right here. Okay, market pushing downside in a corrective way, and finally market broke this structure right here. And again, we are expecting that market looking for the downside, and after this strong impulsive move, you can see multiple entries possible here for the sell like this, right? So you need to identify our impulse and corrective wave simply. First of all, identify trend direction. If trend direction is a bullish and bearish, then you need to identify our impulse and correction, and you need to identify the corrective phase and then mark the structure and mark our flag pattern. So this can be very simple, and at least to marking any flag patterns, you need to at least multiple touch confirmation here. 2 times confirmation must be to marking any pattern. Looks like this one right here, and this is a value setup here, right? So this is a flag pattern here, and continue looking here for the buy to the upside because market momentum is a bullish here, right? So at least price must be tapped on 2 times, like lower lows and higher high connect, and must be price above a 50 moving average, which will be covered in the next chapter. Simply identify trend direction and simply again identify impulse and correction. After impulsive phase, you need to wait for it to create a valid structure. You need to wait for create a valid flag pattern. This can be a bullish pattern and this can be bearish pattern. If market not create any bullish and bearish pattern, then you don't need any other pattern. Like you don't need to trade for the reversal. You need to trade only continuation pattern, okay? Because continuation trend is a very high probability compared to the reversal. I hope you understand what I'm trying to explain, and for more information, for more details, you can also study in an ebook where I explain different types of category about a flag pattern and with a proper example. So I hope you'll understand and learn a lot of things, that how things actually working and which criteria you should follow to mark our patterns. If everything is clear till now, then you need to do some backtesting and practice on your chart on your previous data. Once everything is a fit and learn everything, then you need to switch on next chapter. Otherwise, you need to stick on this current chapter and practice 1, 2 and 3 chapter. If everything is clear till now, then you need to move on next chapter. Otherwise, no. Okay. So I hope you enjoyed the entire episode, and I will see you in the next chapter. Happy to. Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn that how we can use moving average in our entry criteria to identify trend. So this is a very important video to identifying the structure, like where is market going on, like bullish and bearish, and how we can spot our like patterns. And once you identify our pattern, then how we can enter. So I will explain all these things in a detail one by one. First of all, you need to understand EMA is a lagging indicator. This is a not leading indicator. So EMA is not a leading indicator. Remember, okay? So once market up and down below the EMA and above the EMA, it doesn't mean that you can directly buy or sell. It doesn't mean that market trend direction is a change. No, we are using EMA for additional confirmation. First of all, you need to identify our structure. Like market structure as a bullish and bearish. If market creating high and creating lower lows, then we can understand that market is going up and down. Simply, then you need to identify where is our impulse and correction. Once you identify our impulse and correction phase, after that, you need to identify our patterns, okay, in a corrective way. If market is a bullish and creating any bullish structure, then definitely we can looking for the buy. But before the buy, we need additional confirmation, which can be used our moving average. Let me explain one by one, then you can understand easily. So generally, when market momentum is a bearish and then market create a small like move, something like this is our impulsive phase, right? When market create impulsive phase, then we are looking for the continuation and wait for the correction. So this is our correction right here. Okay, so this is a correction, and again we are expecting that market pushing downside. And we are expecting that market continue to downside right here. And same thing happen here. Okay. And after that, what are you looking here? We are waiting for another correction here. If market create any correction, then definitely we are looking for the continuation in a downside. So this move happen here in a bearish market. Now we can understand that where is market going on. Market momentum is a bearish. This one is the first thing is clear. And second thing is here, you need to identify impulse and correction. Right now, this is our impulsive and correction move. This one is our corrective phase, right? It means these two things are clear. And now we need to identify our impulse and correction. So market just continue pushing downside to creating impulse and corrective phase. And again, once you identify our impulse and correction, you need to mark our proper patterns, like flag pattern is here. So look at this one and how we can deal in this situation. Look at this one. This is our continuation. Everything is a downside. So again, market go higher, right? And then what are you looking here? We are expecting same situation. Like if market create here any kind of pattern, then we can sell. Now the next thing is here, how we can identify this correction is a valid and not. How we can identify that this is our proper flag pattern is a valid or not, and this is our valid zone for the sell or not. So you need to apply exponential moving average. Simply you need to go in an indicator section and watch our EMA exponential moving average here. And this is our exponential moving average here. Once you click there, then you can simply looks like this one. And this is a 9 by default. You can enter here 50 and setting. You can change color as per your style right here. And then okay. So this is applicable. Okay, I'm just showing you on time. Then I will explain on chart here. You need to apply a 50 moving average. So for example, this is our 50 moving average here, right? So once price hit our 50 moving average, then we can understand this is our valid zone. This is our valid setup for this sell, right? So in this leg, you can see a 2, 3 patterns create here, but you need to take only first one is here. If market react from this exponential moving average and create here any bearish indication, bearish candlestick, then we can trade, right? And another one is here. You can see the market momentum is still bearish and market create a flag pattern here. Still market push downside, but you don't need to trade this setup here. Why? Because price not react from your moving average, right? Why? For example, if you enter here, right? You enter here and you put the stop loss just of it. And then what happened? After this one, market go higher and take your stop loss and react from exponential moving average, and then market went down. So you need to wait for it to react from exponential moving average, then we can sell. Same thing happen here. Look at this one. This one looks like a continuation pattern here. Again, what are you looking here? We are looking here for the sell. So which point we can sell? We can sell if market react from this point and then create any bearish indication, then we can expect a downside move right here. So this is a process to apply exponential moving average on chart pattern, and then you can trade. So I hope you understand what I'm trying to explain here. I will show you some example on live chart, then you can understand very easily. This is our gold chart in a 5-minute time frame. You can apply any time frame. Okay, this is just example. You can use 1 hour, 4 hour, 15 minute, any time frame you can use. I'm just showing you in a 5-minute time frame because strategy work in every time frame. Simply, you need to identify our trend direction. So now you can see market momentum is extremely bullish. Everything is bullish and creating a higher high. So if market momentum is bullish, simply you need to identify our impulsive phase and corrective phase. Look at this one. What happening here? Before this move, market was bearish here. This was our first bullish scenario here, correction, and again market create impulsive phase, again push downside, and market push in a corrective wave. So when market create any corrective wave after big impulse, then market create indication that market looking for the reversal to the downside. Same thing happen here. Market push downside and break this low and create this strong impulsive move to the downside. So what happening here? Again, create a flag pattern. Okay, this is a continuation pattern. React from exponential moving average and sell. And this is again a strong move to the downside. Looking for the continuation and going higher high because first move was bullish and now shift into bearish and again looking for the upside. And why this move happened here? Because in this case, you can see here that another flag was created at this point. If I am going to show you this point here, right? Because this is a strong impulsive move and correction and we are expecting a downside move. Why this move happened here? Because this was our larger structure here. That's why. Okay. So you need to mark our larger structure as well as before to marking our lower structure. Because once you mark this one, then most of the time you can avoid these type of fake move here. So this is our larger corrective structure, impulse and correction, impulse, correction and impulse, right? Okay, so these things will be clear once you backtest all the things step by step and you. So this is our bullish structure shift here. There is to again bullish corrective structure, again continue go higher, and this is again corrective structure and price above the 50 moving averages, then we can buy here. Look at this one. This is a very important point at this point here. Look at this one. What happening? This is our bullish structure. Everything looks bullish here. This is our flag pattern clearly, and everything going high as per our plan right here. Okay, so this is our bullish pattern. Market close our bit, close of the 50 moving average, so we can buy here. How many times price close below the 50 moving average? But you don't need to sell because price at this point is lagging and people are selling here, and this is a trap for the retailers, for all type of traders. Mostly people are going to sell at this point. Why? Because they are expecting that market was bullish and now turn into bearish, and this was happen here because the trend line is also broken here. That's why. So you don't need to enter here. Why? Because everything is a bullish here. So if everything is a bullish, then you can buy here. You don't need to sell, because if you are looking for the reversal entry, then most of the time your stop loss will be hit. So you have to trade with a continuation trade. If you follow the trend, then very high chances your trade gone in a profit most of the time. Okay. So same thing happening here. Market momentum is a bullish, then you need to identify and wait for the clear bullish pattern, not a bearish. If market form any bearish pattern, any bearish indication, then you need to wait for it. So this is our valid entry here at this point right here, because price close over it. Okay, price close over it and give any, I give strong confirmation here, and this was stop loss, and 1:2 is our, at least 1:2 is our target point right here. Okay, and in the first scenario is here, you can see the structure create this one, and this is a larger entry point here and stop loss just below it, and target 1:2, which is around here, right? So this can be our both setup here, like first setup here and second setup here. Why? Because everything is a bullish and everything looks bullish and create a bullish pattern here. We will explain these all things in a detail in the next chapter, putting all together video. But in this chapter, we are going to just showing you that how we can use exponential moving average to identify trend direction, to identify our trend like chart pattern, and to identify our entry criteria. Okay. So which I will cover more in a details in the next upcoming chapter. So these are valid zone. Okay. Look at this one. What happened here? This is our another flag pattern here. This is a strong bullish candle and breakout. You don't need to buy here. Why? Because if you are willing to buy here, then what happened here? Where is the stop loss? Stop loss just below it. So what happened? Market push downside and take the stop loss and create another structure here, and this become our larger structure and market go higher. Okay. So probably you need to wait for it to reject from the exponential moving average so we can buy or sell. Okay. So this is important. Another thing is here. Look at this one. This is a strong, clear structure here. Breakout, and after this breakout, price continue to go higher. Okay, but you don't need to enter here. Why? Because price not react from your exponential moving average. Price must be react from your 50 moving average, then we can buy here, because market momentum is a bullish. That's why. Same thing happening here. Look at this one. Market created a bearish. Same thing happening here. Market created another bullish pattern here. Look at this one. How price smoothly broke this one. Okay, so if market broke this one and create any bullish continuation candlestick here, like strong bullish candle, and market momentum is a bullish, chart pattern is a bullish, and price close of the 50 moving average, and this candle must be a strong bullish candle is here, which was already created here. So we can enter here at this point, right? Where is stop loss? Just below it, right? And where is target? At least 1:2. This is our target. Press enter here, and this is exit. Again, what are you looking here? Same thing happening here. The market momentum is a bullish, and this is our another flag pattern is create here. So what are you looking at this point? In this case, you can see two bullish strong candlestick here. So this is a valid setup or not? Yes, absolutely. This is one is our also valid setup here. Look at this one. These two candles are very strong candlestick, and we can buy here. Absolutely. And market reject from your exponential moving average, and we can buy here. Okay, and the where is stop loss? Just below it. And where is target? The 1:2. But in this case, what happened here? Price type here, gives small reaction and failed. So if this one is a failed, this one is a okay. Why? Because you follow the plan, you follow the trend. It doesn't mean that every time you win. No. It's all about probability. Where is our high probability? You need to identify those all. So in this case, you can see how many times your market take profit, but this time this become our valid loss. Okay. Again, what happened here? And market push downside, it doesn't mean that market direction has been changed. No, market direction is still not changed. Everything is still bullish here. There is no bearish indication still. Why? Because market momentum push downside and create another bullish indication here. There is no bearish indication. If market pushing downside like this and create any flag continuation pattern here, so we can sell here, and price must be close below the 50 moving average, then we can sell here. So this become our valid entry zone for the sell. Right now there is no bearish indication, just market grab the liquidity, just market taking out the stop loss, and after taking out the stop loss, market creating in a ranging and create larger structure. So why this move happen here? Because this one is a larger structure and this is our larger flag here. Start from this point to this point right here, and this one to this point. Looks like this one. So what is this? This is our larger structure. So we can identify simply the price is extremely bullish and continue going higher high, and market break this one. Okay. So if market break the flag pattern is here, absolutely we can buy here. Look at this one. This is the entry point here, and this one, this low is our stop loss and 1:2 to our target point. So this is our entry point and this is our stop loss. Everything is here. If you are thinking that you should wait for breakout, or you can buy or sell based on EMA rejection, you can buy or sell on both type of strategy. First one is here. If price react from 50 moving average, for example here, this one and this one, 2 times market close of the 50 moving average, but this one is a not strong confirmation. That's why we are waiting for to break the this flag pattern and close of it, and then we can buy here. Otherwise, this is our internal flag pattern is here from here, but this one is a not relevant, like not a good entry. This one is our very high probability entry for the buys. So I hope you understand that how we can use moving average to additional confirmation for the buy and sell. So in this video, enough for the day, and I will see you in the next chapter. Happy trading. Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn that how you can putting all together step by step. In this video, I will explain all the things step by step, that how you can identify your structure and how you can identify your pattern and how many things you need to use before to buy and sell, and where is your stop loss, where is your target, and so everything will be covered in this chapter. So let's see. First of all, you need to understand that how many things you need actually before to buy and sell. First of all, you need to identify trend direction. If market momentum is a bullish and bearish, you need to identify them. When you identify that market momentum is a bullish and bearish, then you need to identify impulse and correction. Wait for impulse and correction. Once market create impulsive move and then wait for correction. If market create a valid correction, and then you need to identify where is our valid pattern here. Okay. If market momentum is a bullish, then you need to identify bullish structure, bullish pattern. If market momentum is a bearish, then you need to identify bearish flag continuation pattern. So once these three things are clear, then you need to identify that trend is a bullish or bearish based on EMA, exponential moving average. Price must be reject from EMA. Okay, so once price reject from EMA and create a valid continuation pattern, then we can buy or sell. And last thing is here, when you are looking for the buy and sell, then you need a rejection from EMA, but proper candlestick and proper risk reward, like put the stop loss below the structure and set at least 2 hours as a target, and you can use 3 hours, 4 hours, it's depend on you. At least use 2 hours as a target. Okay, so I will show you everything in a details one by one, then you can understand very easily. This is our EuroCAD chart in a 30-minute time frame. You can see here market momentum, what happening right now. Market is trying to go higher. Before this move upside, market was completely bearish and everything is a bearish here. So if market momentum is a bearish, so what are you looking here? In this case, we are looking here for the sell, because market momentum is a bearish and market create any strong impulsive move and wait for correction. So in this situation, you can see here this is a strong impulsive move to the downside, and before this impulsive move, market create this is our corrective phase, right? This is our corrective phase, and to marking any corrective structure, at least 2 touch point is a compulsory. Again, what happened here? Market push downside and create a strong impulsive move to the downside, right? Again, what are you looking here? Simply, we are looking here for to marking our another entry point, and we can sell here if market create here any kind of continue. Same thing happening here. This is our lowest point, and this is our another lower point, and this is our higher high point, like looks like this one. So this is our another continuation pattern. So in this case, what happening here? Market momentum is a bearish and everything looks bearish here. Okay, and this is our larger flag here. Okay, And we can see some different type of patterns. If market create a very large flag, then you can see also sell setup or buy setup. If market create a very steep flag, but market must be reject from EMA, right? So in this case, this is our larger flag and market looking for the continuation in a downside like this, right? So this is happening in a EuroCAD based on 30-minute time frame. Impulse and correction, strong impulse, correction, again impulse, and this is also correction and again expecting impulsive wave. As I mentioned in ebook, okay, and in a starting chapter, that if market push downside or upside in a impulsive wave, but in a corrective phase, I'm talking about impulsive wave, right? So if market push downside in a impulsive, in a corrective phase, okay, so this is just indication that market can be reversal in this situation. In this slide, you can see market just push downside strongly in a downside. In this case, market push downside, but in a corrective wave. That's why this is an indication that market or like sellers are losing their strength, okay, and buyers looks like still activate, okay. So this is not necessary every time, but this is a just indication, and you don't need to buy here or sell here because this is a reversal, right? After that, what happened here? Market push higher and create a strong move to the upside. So when market create a strong move to the upside, and we are looking here for the buy after creating any continuation pattern. So market create this is our flag pattern here. Okay, so we can buy here because this is a flag pattern. Okay, before this buy, we need an additional confirmation based on EMA 50, right? Let's look at this one. Is there any EMA reject from this one or not? Looks this one. Market not reject from this EMA. So this entry is not valid here and we are not looking here for the buy. Okay. Remember, first of all, you need to identify trend direction, and second thing, you need to identify impulse and correction. And correction point, you need to mark a proper structure, mark your proper pattern. Okay. So if everything is a fit till now, then you need to process on next thing. And the next thing is our rejection from EMA, exponential moving average. And this exponential moving average must be a 50 moving average, right? So this is our 50 moving average here. Okay, market not reject from this EMA. Okay, so what are you looking here? We are looking here for buy, but we need to wait for to create complete structure, to complete a complete pattern. We need to wait for to create a complete pattern here. Right now there is no buying entry at this point. Look at this one. What happened here? This is our structure, looks like this one, right? And this is also a bullish flag pattern here, and this is also continuation pattern. You can see this can be a different shape and size. Okay, but you need to understand this is our corrective phase or impulsive phase. Simple, right? We can see clearly before this corrective phase, this was strong impulsive, and this is our corrective phase. And again, we are looking for the continuation to the upside. This is our another strong move to the upside and showing continuation to the upside, right? So when we can buy it in this situation, look at this one. Price must be reject from EMA. So in this case, where is our EMA? This one, look like this. Price reject from this EMA and price must be create a strong bullish candle in this case. So in this case, you can see these are lot of bullish candlestick here. But I'm showing you this one looks very strong candle compared to the last two candlesticks. This one showing very strong candle. Why? Because the shadow is a downside and body to the upside and showing strength for the buyers. And the same thing is happening here. You can see this candle also showing bullish indication, but there is not a clear indication that market can continue go higher, and market maybe take a small pullback and then create a strong candle, and then we can buy. Okay, so simply you need to wait for to create strong candlestick before the buy and sell. This is important while you are entering any trade. So in this case, simply we can buy here. And where is stop loss? Stop loss must be below the 50 moving average and below this structure. And where is target? Target at least 1:2. This is our first target, and this is your last target can be. Okay, but it depends on you. You can set 3 hour, 4 hour, but I will suggest you in a start with a 2 hour setup, because 2 hour is also very good setup. Even if you lose 50% of the trade, then you can also make money. Why? Because when you lose 50%, okay, the rest 50% give you like 100% return. Means 100 minus 50, you will get a 50% of the profit, net profit. If you lose 5 trade out of 10, okay, then also you can be profitable, right? So you need to focus on small risk reward, which can be achieved very easily, because this will help you a lot to understand things that how things actually work. And when market hit your target very easily, then your mindset and your psychology level increase. Okay, so now this is our another impulsive move here, and this is our entry. Again, what are you looking here? We are looking here, this is our another continuation, and if market create here any like flag pattern, a result from EMA, then we can buy here, otherwise no. Okay, so this is our another thing is here, this is strong impulsive move to the upside. Let's see what happened next here. Market trying to create any structure here. Okay, let's see what happened next here. Okay, so market asset from this EMA here, and what happened here? This is our another like flag pattern here, looks like this one, and this is our another flag pattern. And what are you looking here? Simply we can buy here or not. Ask yourself. Absolutely we can buy here. Why? Because market is a bullish, and market in a uptrend and create a strong impulsive move and create like a corrective phase, and this corrective phase is a broken and result from 50 moving average. So we can simply buy here. And where is stop loss? Just below it. This is our stop loss, and where is target? At least 2R. This is our target, right? So these are two target, like first trade is here and second trade is here. Okay, so we can buy here. The next candle open, like first candle is a create here. Let me show you exactly where you can buy here. So this is our entry right here, and we can buy here on a next candle open, because this is the indication that market was completely like in a sideway, and then market create a strong bullish candle. Market is a bullish and result from 50 moving average. So simply we can buy here. Okay, so this entry is activate here. Okay, let's see what happened next here. All right. Okay, so now you can see market trying to go higher and continue pushing upside. And one more thing I want to mention here, if you miss first trade here, so market keeps a second opportunity here. In this case, we can see this is a small flag here and break this one, result from 50 moving average. So simply we can buy here in this situation. This is our another entry here, and put the stop loss just below it, and this is our target. So these entry can be possible, and let's see what happened next here after this one and what we can expect. Okay, market continue to go higher, and this entry hit our target point is here, right? So this is our possible entry, how you can simply buy if market momentum is a bullish and everything is a bullish. I taken this entry on my account. Okay, as you can see here, this was entry setup here where I mentioned everything, that how I taken out this trade and where is my stop loss and entry, everything is mentioned here. Okay, so this was a trade already taken out on my account, and you can simply follow the same principle, same rule to while you are entering in a bullish market and bearish market, and same thing applicable in a bearish market. Let me show you exactly. Let me show you a few more examples to understand more clearly that how things actually working and what criteria you should follow before the buy or sell. I hope everything is clear till now. If anything is missing, then you can rewatch the chapter again and again. This is our one more example about gold, and this is a 5-minute time frame. You can see here market momentum is showing bullish here. Everything looks bullish here because market overall looks bullish in a higher time frame, and market creating higher high and upside, right? So everything is a bullish here. Simply what are you looking here? In this case, simply we can buy if market create here any bullish indication, and if market create any selling opportunity, then definitely we can sell. But when market momentum is a bullish in a higher time frame and looks bullish here, and then we can buy for the longer term. But market creates any selling opportunity, then we can sell. But probability of the selling is a 50-50%. Remember these things. Okay. So in this case, market looks bullish here in a higher time frame. Everything looks bullish here. Okay, so this is a 5-minute time frame. Everything was bullish here, and everything looks bullish. And then what happened here? Market pushed downside and create a strong downside move here. Again, what are you looking here? Look at this one. This is our previous leg right here. And before this previous leg, market create a pullback and another continuation in a downside. So what are you looking here? Everything is a bullish here, right? Because market create this flag pattern here, break out and go higher, another continuation pattern and go higher. And then what happened here? Again, if we are looking for the continuation like this one, but what happened here? Market create a like breakout and everything, but market not go higher and push downside. So this is an indication that market are not able to go higher. Buyers are weaker and sellers are active here. Okay, so it means we can sell if market create any opportunity. So what happened here? Market push downside and pushing downside in a corrective ways. So in this case, what are you looking here? Simply we are looking here for the sell if market create any opportunity. So market not create here any kind of opportunity, because this was the last flag here. when we can expect that if market create any flag and break this one and reject from EMA, then we can sell. But market not create any opportunity and market just going higher high. So what are you looking at? It means market are trying to create a larger flag here, okay? Because this one is our smaller flag, okay? And possibly market create a very larger flag, something like this, okay? Then what happen here? We can expect that market create a larger flag and then sell here. So this is the next possible scenario, okay? But what happened here in a lower time frame? I mean, in this internal structure, this is our internal structure, right? Because previous high, previous low is here. So if anything has happened between this one, we can buy or sell for the short term, not for the longer term. But when market create any selling opportunity, then we can sell for the longer term. But when market create any bullish opportunity, then we can buy for the short term because we are in a counter trend. Okay, so I hope you understand what I'm trying to explain here and how we can identify counter trend and measure trend. Simply, the main high or low is here. If market move between the main high or low, that's a counter trend. And this is our measure trend, like looks like this one. This is our measure trend, right? Okay, let's see what happened next here. In this case, you can see here, the market momentum was bullish here, and I'm talking about internal structure right here. Break this one and continue to go higher. And again, what are you looking here? We are looking for the continuation, but market not create here any kind of opportunity, right? Market create flag, but there is no strong candlestick confirmation. Okay, so we can't buy here. Even if you mark the 50 moving average, you can see here there is no rejection here. Market reject at this point, but market not create any kind of strong candlestick for the buy. Okay, so there is no strong bullish candlestick confirmation. What happened? Market push downside, this again impulsive wave, and then recovery to the upside in a strong impulsive wave. It means market in a ranging and market can create opportunity for the buy and sell in any side, right? So market was bullish here, the short term bullish momentum to the upside, and if market create here any flag, so what we can expect? We can expect another continuation to confirm this is a larger structure and then sell, right? So let's see what happened next here and what we can expect here. And what happened if market push downside? So for example, if market push downside, right, and create any flag pattern, then we can sell here at this point. And this is our next possible entry in a 5-minute time frame in a gold, right? So let's see what happened in next here in this case. Okay, market trying to create a bullish flag pattern here. So finally market create this strong bullish pattern here. Okay, looks like a continuation pattern. And we can expect one more short-term move to the upside and we can buy here at this point, right? But before this buy, you need to check there is EMA rejection or not. Look at this one. Perfect. Everything is like reject from here and strong bullish candle, also breakout and reject this one and create a very strong candlestick confirmation here. So simply what we can expect here? We can expect this one is our buy setup. Put the stop loss just below it. And where is target? Target is almost here, right? And this is our entry, this is our stop loss, and this is our target. Why? Because the structure, larger structure can be expect something like this, and then we can expect a downside move right here. Okay, because this is a very larger range, and this is a larger flag in a different time frame. This is a 5-minute time frame. You can see in a 15-minute time frame, there is a clear flag pattern here. What happened next here? Okay, all right. What happened here? Market continue to go higher, and market hit our target point right here. Okay, so this is our perfect entry setup here. Strong impulsive move. Simply you need to identify impulse and correction and again expect a continuation to the upside. Again, this is an impulsive move. It doesn't mean that market create here any flag pattern right here, so we cannot buy. Of course we can buy, but market must be create this type of pattern, then we can buy. Otherwise no, right? You don't need to wait for, like, you don't need to sell directly. You need additional confirmation before the sell. This is our like complete pattern and market create here any continuation pattern, then we can sell. This is a clear setup here for the sell. And possibly in a next time frame, like in a 50-minute time frame, 30-minute time frame, you can see very clearly like any other sell setup here. Okay, so it's depend on you that which time frame is suitable for you. I'm just showing you in a different time frame because this is applicable for all time frame. That's why. Okay, so this trade I taken out my account. This is our chart here in a gold. You can see in a 5-minute time frame, everything is a bullish here and everything looks bullish here. And I taken out this setup here for the buy and the entry, stop loss, everything, right? So I hope you understand that how things actually working. If market momentum is a bullish and bearish, then how you can trade. Simply, you need to understand that where is our structure. If market momentum is a structure is a bullish, then you need to identify impulse and correction. Once you identify them, simply identify our structure. Identify the structure, then you need to use EMA 50 moving average when we can buy or sell based on EMA rejection with healthy bullish candle or bearish candlestick formation, and set our 2R as a target, and you can set 3R, 4R as per your plan. But I will suggest you start with the 2R, which is really great. If you win 50% of the time, then end of the month you will be profitable.